presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Well, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We are 9 hours a day. We go 24 hours a day on the Internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Make it a great night, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials down 101, NASDAQ off 29, S&P's off 9.5, gold contract up $10.70, trading at $1,305 an ounce. Silver up 22 cents at $19.77 an ounce. Platinum up 28 at $1,482 an ounce. Copper up 2 pennies at $3.16 a pound. Light sweet crude up 44 cents at $102 and 14 cents a barrel. Bonds, the ever-ready bonds, folks, ever-ready bunny, they went topside once again, wide price spread, with conviction, with volume, with all of the above. 10-year up 16 ticks at 125.18. 30-year up 1 point and 6 ticks at 137.02. And King Dollar down 93 ticks at 80.12. You got the euro flat at 137 and the yen trading down 42 at 101.83. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have out here? Let's see this. A little challenging. I just got off the plane, folks. I'm in beautiful Boston right now, overlooking this beautiful harbor. Going to meet tomorrow morning, but it is gorgeous here, no doubt. So, S&Ps, what do we have? Okay, so if we go back to yesterday first, this is what you have. You have your April 4th high. April 4th high, 1897.28. Had 851 million up there. We get up and we test that area yesterday with 604 million. Today we back down with 590 million. Now, we're going to need a lot more volume in order to basically get the lower price. We got the lower price today, but there's going to have to be an expansion of volume to get us down to the first price point where I expect we're going to go, which is the 1814.36. That, folks, in the S&P is the April 11th swing low. The next area is going to be the February 5th area. The February 5th area is the benchmark on all the indices. In this case, when you're talking the S&P, you're talking about 1737. The ironic part, I think, is that, between being on the plane and listening to the financial stations on the way in, was that the mantra continues to be out there, you don't have to worry about any pullbacks. The market's still going to go higher. It's amazing. Anyway, bottom line, what do we have out here? We're going to need heavier volume to get into lower price. We take a look at the Dow Industrials. What you have with the Dow Industrials is this. Dow Industrials come back, let's see. She come back $100, which is not the end of the world for the Dow. The Dow Industrials right now, they failed too. They also got inside the range. The range on the Dow Industrials from the April 4th level is 16,631. We close at 16,616. That's saying the Dow wants to run down to the 16,015, and I suspect what we're going to see, that benchmark is hanging out there. That benchmark is the 15,340. Now, NASDAQ Composite. We go take a look at the Composite. What we have with the Composite is this. Composite out here today pulls back Well, first off, what the composite had done is this. The composite had actually failed yesterday. The composite, first off, should have had a much larger bounce. It couldn't get a bounce going to the top side. The composite got to a price point yesterday of 41.55. The composite, folks, should have been able to bounce up to like 41.90 in a heartbeat. Bottom line, couldn't handle it. What do we do today? You pull back. Now, the composite is also going to need more volume. We only did 1.73 billion versus 1.9. What you do have, however, inside the composite is because the bounce was so anemic that this could be a very large ABC structure on the way down. We'll see how the volume either expands or contracts tomorrow as we try to get into lower price. We take a look at the bond market. The ever-ready bond market, folks, is just amazing. There's no two ways about this. What we have with bonds is this. The 10-year bond goes topside today once again. That topside move today, we did it with 1.5 million contracts. It's a huge move. It's an ABC structure on the way up. Right now, we're out there. We're trading at that one. Come on, baby, there she is. Okay, so we're trading at a 125.18. That little baby is on its way up to the 129 area. The 30-year is just the 30-year had broken the B point quite a while ago. The 30-year goes up over a point out here today. Has the price spread, has the volume, has all of the above. That is basically, well, it is saying the 30-year right now, it was just a little bit slower here, but we will get this. Okay, so the 30-year right now did 370,000 contracts. We're at a price point of 137 flat. Now, when you take a continuous contract, folks, the 143 area in the bond market, in the 30-year, is the first not only price point that this thing wants to run to, that price point there is going to be crucial to see if, in fact, it can break through that area. And this is why. The way that bonds came down after going up astronomically for a huge amount of time, that the bond market topped out in June of 2012. Well, we're approaching June of 2014. It's hard to believe, but you're talking 2 years later. So we topped out in bonds at 153.03. We went sideways for about 7 months. Then you had a monster downdraft. That monster downdraft took bonds from 149 into 2 months to 133. Doesn't seem like a lot, but the bond market, that was brutal. Now, in the context of this bounce, we're going to go see the 143 again. If you break through 143, these rates it will not only go to the high, it could bust through the high. Because on a much longer basis, okay, what you have on a much longer basis is a trend that hasn't broke down, not even close either. You have a market that went topside. It came back. It tested with dramatically lighter volume the breakout area. You have a bond market that has been in a bull market since 1980, and it just, bottom line, the trend is up. So we'll see how it tackles that high that's out there. The bullish part, well, here, I do the bearish and the bullish. The bearish would go like this. The bearish is you're up at the 143, you're going sideways, volume dies, and you come off that area and you have an expansion of volume. Then you go back up and test the area. There'll be a test, and the volume dies in the vine. You have that, that's like saying, okay, the bond market's getting tired. That would be the bearish scenario. The bullish scenario goes like this. The bullish scenario goes that we cross, thus far it's bullish. The bullish scenario to continue goes like this. You move up to about 141 or 137. Then you're going to go sideways, and you're going to build cause, and then you just blow through the 141 area. You do that in the bond market, we'll go past 153. That's going to bring rates down dramatically, dollar up dramatically, and that's what that's telling me. If, in fact, that is how it shakes out, what we will see is we're going to see a downdraft, not the type of downdraft we had in 2007, but you're going to see a downdraft that's pretty dramatic, meaning it could be 12, 15, 17% in the S&P. Everyone thinks that you can't have a 10% correction in the S&P. If you take a look at the small caps right now, the small caps are probably running about 11%. But in fact, that's the average. If you take the average small cap stock, it's probably down 25 to 30%. This is Tom O'Brien, it's the TFNN. You stay right there, folks. We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls. Now, Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We had Dow finish down 101, NASDAQ off 29, S&P's off 8.5. And as we do each and every Wednesday at 20 past the hour, we have our man, Mr. Daryl Martin. Daryl's an outstanding show each and every trading day right here at TFNN, folks. 1 to 2 Eastern Standard Time. Now, remember, you can get all the programming at TFNN right on your cell phone. You put TFNN.mobi right in your browser. If you'd like to get Tiger TV, the way you do that, just put TFNN.com. On the right-hand side, when the website comes up, you'll see a little box on the right-hand side with the devices in it, meaning whether it's an iPad, whether it's a phone, hit that box. It's only one box. Our servers will understand what device you are on, and then you will get delivered Tiger TV, which, of course, is going to get you the charts, plus the audio. Darryl does an outstanding show every day, 1 to 2. He specializes in the Nadex product. If you haven't test drove the Nadex exchange, folks, it's an awesome exchange, awesome product. Come over to our website at TFNN. You're going to see the banner on the top and on the side. You can hit that banner, bring it up. They'll put $25,000 of funny money into it. If you get to catch his show, that's great. Darryl and I also have another show every Friday morning, 10 to 11 Eastern Standard Time. Darryl Martin, what's going on?
How's it going, man?
Going great, man. Well, it's always great when we get volatility, man.
We've been having plenty of volatility lately. It's been pretty nice.
There's no doubt about it. And
you got the indices rocking. You got some FX pairs moving for you. The commodities have been going off. So, yeah, it's been nice. And
it's the beginning, folks, of, you've heard the promotion many times that your trade is your stop. Once you get the Nadex platform up and going, what you're going to want to do is come over to our website at TFNN and test drive Darryl's scanner. It's an amazing scanner that basically not only just scans what contract you are going to want once you decide what the strategy is, but then there's deviation levels inside it. There's just so much inside this one piece of software package that is absolutely amazing. And when we talk in numbers, we're just talking numbers that hit on a continual basis. The scanner's not going to tell you whether to go long or short, folks, but once you have the strategy up, it'll tell you what the probabilities are of where these are going to go. And, in fact, if they go there, like Darryl and I talk about many times, well, you don't want to be, if it's at an end of a deviation point, you're not going to want to be basically buying at that point. If you want to sell, that's a different deal. But it's really important to understand, and you do want to go over and test drive this product. So, we tested, we got the high yesterday, tested the high, and we know that, intraday, folks, what happens is that when you get movements like this in the market, this is where these contracts are just pretty phenomenal because, as Darryl just said, the currencies are moving right now, the indices are moving, the commodities are moving, and you can trade all of those inside the product.
Exactly. So you can go in there and also, what type of day you're trading. Maybe you're trading at night.
Yeah.
Maybe you're trading in the morning. Maybe you're trading in the afternoon. And what kind of account size do you have? So, some people, actually, I talked to one of my neighbors, and he's like, I want to get into it, but I really don't want to risk that much. And I'm like, start with $500 or $1,000. Yeah, right. I should start with demo, actually, for free. And then from there, go over, you can trade with $20, $30, $40. The other day I put 100 contracts on, but they were $8 a piece. So you can do one at a time. So it's not like with the standard call option.
Folks. That's the reality.
Yeah, you go do a call option, you're doing 100 options for one contract. You do a Nadex contract, it's one contract.
Right.
So you don't have to go in and you don't have to do 100 or 50 at a time. You can do one at a time. And which the reason I like it, even if you have a large account, I'll do some pretty large trades. You'll do some large trades. Is you can ratio your size.
Yes.
I can't do 10.5 ES contracts.
Right. That's right.
So I can only do 10 or 11. I can't go from 1 to 2. I have to go from 1 to 2. I can't do like 1.1 or 1.2.
Sure.
So,
no, I'm with you. Right.
So basically, my risk compounds on futures, but it only or it multiplies on futures, but it only adds on Nadex. So,
and as we're speaking here, folks, what happens, which is is definitely unique in this product, is that Darryl and I, we talk about boxes. So when you're looking at a contract, let's just say that, it's, 120 by 140. If you think the market's going down at 140 and the market's already trading 139, well, guess what? Your risk is only from 139 to 140. If you think the market's going up and the market is down at 121 and the bottom of the box is 120, well, you only can lose that point. That's the thing that's amazing about this product, and so the risk goes down dramatically, the reward goes up, but of course inside that same context, it is at those prices because the option market makers think that it's going to go the other way. So I'm not making, if you're doing that, but as Darryl and I, we do the program live, when you're doing price, when you're doing volume, if you get those tests, if you know the out of time in the trade,
exactly.
The bottom line is that your probability goes up dramatically because you're waiting for the test, you do the test, and then you fire the baby off.
Exactly. So the price may be the probability based on just statistical deviation models, but they're not based upon volume and price action analysis.
Right.
And that's where you get your edge. I mean, you look at it, you balance it out. You also take profits because all those numbers are based on expiring in the money, right?
Yes.
Whereas you shouldn't be holding. You can if you want to, but...
No, you shouldn't. No, there's no doubt.
Yeah, I mean, you don't hold an option till expiration. You don't hold a future till delivery.
Right.
Why would you hold any other contract that way? You don't hold stock until they buy it back. So...
it's the end of the world, exactly.
Yeah, exactly.
And that's what we're talking, folks, because all the contracts expire, so it's really cool.
And you can hold them, you can close them. I like to take my profits. And but I mean, you can go in there. I mean, it doesn't matter what your account size is. They've added market makers, and that's tightened up the bid-ask spreads.
Yes.
They cap out the fees at $9. So if you do 100 contracts, it's $9. If you do 10 contracts, it's $9. If you do 1,000, it's $9. Like in one single order. And so that's a nice benefit because fees add up huge.
Sure.
And I had one trader. He showed me a strategy. He's like, "Look at this strategy." Da da da. And I was like, "Did you add your fees in?" And his net profit went from like 6,000 to negative 200 from fees.
Wow.
Yeah, just fees, And so he thought he made money until he added his fees in. And I'm like, I'm not talking about like fees on futures. So
no, I'm with you.
And
now,
I was like, it really adds up if you can cut that cost.
As to what time you're trading, one of the most liquid contracts out there is the yen pair. And that yen last night was insane. Can you just talk about that a little, Darryl? Because that thing got destroyed at 0400.
Oh yeah, well, there was news analysis going on last night. You had going in and looking at the different announcements that came out. They had some like machine orders and stuff that had nothing to do with the yen moving.
Yeah.
French CPI came out, not a big deal, but climate count change, unemployment rate over in pound, that's going to rock things. That was moving the yen around a little bit. But the biggest thing is, if you were trading last night, you definitely had plenty of opportunity. Let me bring a chart up right now because I know you're on the phone there. I'll bring one up, and there we go. It's a massive, massive move like you're talking about. Check this out. We go in, and you got 120 pip drop. This is a nighttime trader. This is somebody who wants to trade between like 6 and 10 o'clock in the evening. And able to get that kind of volatility. And they can take advantage of it without being scared out of their mind.
Right.
So
you stay right there, Darryl. We're coming right back. Darryl and I'm going to be right back, folks. Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Tommy O'Brien Show. Tommy's going to be right back with us. Right now, we're checking out the U.S. yen and looking at what was going on last night. We had some really nice movement in the FX markets. We were talking about how you can trade the U.S. yen over, night. And a lot of traders don't understand that they can hop in. They can actually take advantage of these markets in the evening. You don't have to be a full-time trader. You don't have to be somebody who's trading, every single hour of the day. You don't have to spend all night trading. There's plenty of volatility at night that you can take advantage of in the markets. So, how do you do that? Well, if you want to take advantage of the volatility at night, or maybe even the lack, sometimes there's a lack of volatility at night. Either way, if you want to take advantage of that, hop on in and check out the next platform. What you do is you hop on over to TFNN.com, okay? And you can make money in flat and volatile markets. And you can put on a trade for 30 minutes. And let me show you where the link is just in case you don't know. You go to TFNN.com. If you're watching over here on Tiger TV, if you're not, just hop on TFNN.com, top right banner, click on Nadex, and then under Trading, Demo Trading Account, you can fill out that information, name, username, first name, last name, password. They'll give you $25,000 of funny money, demo money. You can go in there, and you can see what this is all about. And we have some education on our site. I have my show every day. Be glad to help answer any questions that you have. Hey, Tom, you there?
I am. Thank you so much.
Hey, you bet. No problem.
I'll tell you. And what we have had out here, folks, as Darryl was just saying, the markets out there, the commodities are moving, the currencies are moving. It's a great. It took a long time for this S&P to test the high. We'll see how we handle a lower price tomorrow. We definitely need more volume. There wasn't enough volume on that market today on the way down, folks. So it's going to be interesting to see, is there follow-through, number one? If we go take a look at the SPY just for a second, you'll see the way the SPY came down today. We got back inside the lower range. So you had the test. The test failed with lighter volume, by the way. You come back inside the range, but you can see that we only did 71 million shares today. Now, we hit a high yesterday of 66 million, but she's going to need about 100 million downtown. That's what I'd like to see as a follow-through. Then you know that it's going to go right after those, not necessarily the February 5th lows yet, but it will come after the April lows. Small caps are a whole different ball game, folks. Small caps, no doubt, not only have come down, they're down about 10% right now. Now, that's average 10% across the board. There's many small caps that have got good down 20, 30%. But this IWM and the Russell 2000 itself, the IWM is at 109.62. The last low established was 108.28. The February 5th low, which is trying to get into, is 107.27. You break that area, baby, we're going to have a field day, because that means it's going to be a 90 IWM, and that's going to basically smoke the Russell. So,
and one thing to check out too, I'm all about seasonality, fundamentals, technical statistics. I like to look at all four of them, and I've been watching the applied volatility because I'm big on IV because I want to see where premium's at and expectations of movement. We're at a seasonal low right now on IV. Like, we're really low on the VIX.
Okay.
Which is impacting the SPX options and reflection of S&P E-minis if you trade US 500 on Nadex or the S&P futures. We're at a seasonal low right now, and that's not abnormal. Right now, about this time of the year, we're at a seasonal low. We actually start ramping up right about this time. We get a nice little peak there in the first few days of June, and it levels off. But you're talking about going from 12 to about 20 on implied volatility, which is a massive move. That's an 8-point move.
Right.
And so also what that usually means is the market usually goes down. Okay?
Well, what's amazing what you're talking about? I just brought this up, folks, and this is amazing. So there's absolutely still zero fear in the marketplace. Zero. So the VIX only moved four ticks today. Isn't that crazy?
Oh, yeah, exactly. So it's actually the perfect setup to look for a big short.
It is.
And it's seasonally justified because, this time of year, it usually is just stupid low like it is right now. And then it pops up, and you'll get one or two just massive days that we're going to get over here in the next 2 to 3 weeks. Yeah. You're going to have a few just insane down days. And that's very reflected by the seasonality. And I can go in, I can look at seasonality, current history. It's one of the cool things in the Thinkorswim platform. And you go in here and I can see, look at that. This is a 1 year, just last year. Look at this. This is a VIX from last year. This is the VIX from this year. And see, we're just looking right into that. Bam. So that's a 1 year seasonality. I can go into 2 year. Again, see, over the last 2 years, it's went up. If I want to look at the average of the last 3 years, still at a low and going on up. So I can see the consistency of basically, I mean, 1, 2, 3, 4, 5 years, it pops right up here in this next week. So,
and
I mean,
the thing is,
when now it should start rising.
Watch what happens. Yeah. If you traded options, you know that goes up, premium goes up. That means that you're paying more, and that is on the bull or bear side. It wouldn't matter. What we're getting our head wrapped around here is that when you're in the Nadex platform and you're doing these contracts, well, the same thing would happen. That's why you want to really get on there, understand how that platform works, because the reward versus the risk at this particular point is amazing, because the VIX hasn't popped yet, and the premium is not built in whether you're buying or selling the S&P 500 at this point, which is just, well, to me it's crazy, but it's pretty amazing, because we know what the difference is. Once it pops up, then, you do have higher volatility, folks, so you're going to pay a bigger premium whether you're a bull or a bear. Pretty amazing.
And so it's one of those things, like right now, if you're a buyer of premium, I mean, if you're just a, Nadex or not, right?
Yeah.
I mean, if you're a buyer, like if you're buying straddles, strangles, puts, calls, whatever it is, they're cheap right now.
Right.
On the S&P.
Oh, sure, right.
So, like right now, I mean, I've had days, I remember on the flash crash, I was short some futures, and I had some, options I was long, on some calls. And I wasn't even thinking about my calls, right? I'm just like writing these things down, and finally I just take it off, and I would just. Fortunately, I got out of the trade. When it ran down, I got a nice profit on it.
Yes.
But I went over to look at my calls, and they were profitable in the middle of the crash.
That's right, because the volatility went up so dramatically.
It went up so big, I actually was making money on my calls.
Yep.
And so, I mean, this is like if you are a straddle, strangle type trader, this is the time to do it. If you're, like that's like right. I'm talking about longer time frame.
Premium right now, because there is none, folks.
Exactly. You don't want to do long-term premium.
Right.
And I used to do like 3, 4, 5-week condors all the time.
Okay.
And that's where I really learned about implied volatility, because that's where you get killed. And so you don't want to be a seller of long-term premium. 1 week, 2 week, 4 week premium at all at the moment. You want to be a buyer of it. But one of the cool things, again, on Nadex is maybe you are a premium collector, and somebody tells you, don't be a seller of premium. You're like, well, that's what I do. You can be a seller of premium over the next hour, 2 hours, 8 hours. You don't have to take on 4 weeks of risk on a trade. And you can make the same amount, or actually, usually you can actually have better risk reward doing it on Nadex. So it's just like, I love premium collection, but now I hate long-term premium collection. I'm like, I want to collect my premium now. And so you can go in there.
That totally makes sense, because it's, and of course, folks, over the last 30 years, there's always new products. And this Nadex product is amazing. And, just like, I remember when basically the option market really just started getting going. And, it took a while for really people to get their head wrapped around it. And then it got to the point that when you're doing penny-wide options, folks, your risk goes down, the reward goes up. You can trade for less money, and that's what we're talking about inside this platform. Your risk versus your reward goes up. You can absolutely trade for a lot less money with the same type of structure, and what don't go blow your brains out, because, as Darryl and I have been talking about, you can put trades on for, $10 and $8, and don't go buy 50 of them just because you can do that, because you don't have to. That's the bottom line.
Exactly. So, I would go in and, like, here's the trade I would do. Okay, basically, I'd go in, I'd look at the Russell, I'd look at the small caps. I would basically look for a 30-cent credit spread on both sides. Okay. And I would check, and this was like basically the day after expiration. Pretty simple trade.
Right.
And I would take profit if I could buy it back at 5 cents. Okay.
Right.
So when I got 25 cents, 80% of my profit, I'd close the trade out on either side. I just had that in. And then now understand, when I do that trade, I'm risking technically, 60 cents to make to lose $9.40. And I do these trades now where it's like 1-to-1.
Amazing.
Over on Nadex. So,
listen, folks,
every
don't forget,
hour.
you can listen to Darryl each and every trading day, 1 to 2 Eastern Standard Time. Darryl, you have a great night, safe night. Thanks so much, man. We look forward to the show tomorrow.
All right, thank you. Sounds good.
Man. You stay right there, folks. We'll come right back. The Dow finished down 101, NASDAQ up 29, S&P's up 10. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. And folks, if you'd like to test drive my daily newsletter, Market Insights, the way you can do that, you can come over to our website at TFNN. You go to newsletters, you go to trading newsletters, you'll see the Market Insights. You can test drive that 2 weeks absolutely free. Now, when we're looking at this market, I'm going to start with the small cap. So we'll take a look at the Russell 2000. Why? Because the Russell 2000 not only came down on the first leg pretty, well, not pretty intense. It was intense, period. This little baby, the Russell 2000 right now, is trading where it was trading in October of 2013. Okay, so, you know, it's got some damage underneath that. The high in the Russell is 1212. We're at 1103. The crucial mark in the Russell 2000, folks, goes like this. We are only about 9 points, we're 9 to about 15 points away from a major breakdown. When I'm talking a major breakdown, this is what I'm talking. And I do expect this is going to happen. The reason being is that all the volume in the Russell right now that's hanging there, the first place that it really has any type of support is, actually, you got 30 points, now 23 points lower, which is not that bad. That's at 1080. You break the 1080, which I expect we're going to, by the way, then you get 982 hanging out there. And 982, that's a big hit. It's another 100 points down. When, we're already down 108 points. That breakdown there would basically indicate that not only will the other indices come follow it, but what it does is puts you back a year in the indice, and we're talking about a year in the indice, and we're talking about that happened in the course of only about 12 weeks. So that's a big number. If we go take a look at the NDX 100, because the NDX 100 and the Russell 2000 are the weakest indices in an extraordinary way, not in a small way. This is 1 second. Let me get this thing. Come on, baby. Q. Oh, my God. Okay. So the Qs, sorry about this, folks. I'm struggling just a bit here. Unbelievable. Q. Okay, so if I take a look at the NASDAQ futures or the NQs, this is what you have. QQ. Go back. There we go. I got it. Okay, so right now the NQ or the QQQ is at 87.63. 83. That level has high volume, which is going to get tested, number one, at the lows. That low is 83, so $4 off where we are. That's the first part. The larger problem in the NQs and the QQQ is this can go back to 73 in a heartbeat, folks. 73 also, and this is where this is lining up, would get you a year back just as the small caps. Now, the key in between both of those, they look to me like they're going to go there. The key, however, is still the S&P. The S&P, what it did today, it gave it up slightly. 8 points is nothing. But that's the other side of this coin. It had volume out here inside that context of, it expanded a little, 620 million. What we're going to need in order to get lower price going is that a follow through tomorrow with like a 670, 720, 780. Then you're going to start seeing some rocking and rolling, because you got to remember that we're in summer trading right now, even though it is only the 15th, 16th of May. Why? Because I expect, it looks to me like what happened is that the Northeast and the Midwest had such a bad winter that just seeing the sun we're getting in summer trading earlier. So what that means specifically is that you're going to have lighter volume on Friday, you're going to have lighter volume on Monday, and, of course, what ends up happening with lighter volume is that, let's say we get on tomorrow with volume expanded. As a bear, I would expect that you bounce slightly on Friday, you go up with slightly lighter volume. If, in fact, we go down tomorrow, the volume doesn't expand, and the next day, Friday, we get down a little bit more and the volume contracts again, then what that puts on the table, this is pretty wild, but it would put on the table that you could go test those highs in the S&P again. That's how this shakes out. So the characteristic of the volume here is going to be important. The amount of tests that we've done at these highs are pretty amazing. My take at this point is that that high basically is in. The reason I'm saying that is because bonds have been projecting for quite a while, for months, that they want to go topside, rates want to go down. All of that has happened. The 30-year happened first, big time. 10-year blew it apart today. And you got to remember something, that the amount of folks and amount of trades that are on the wrong side of that bond move have to be covered. And that includes, see, what is unique this time is this, too. If we go back, even 5 years ago, or maybe 7 years ago, there weren't bond funds that were just easy to short bonds. Now there's huge bond funds, ETF structures, that are short bonds. That is just like when the GLD started in the gold market, folks. What happens, those are unnatural sellers of bonds. When I say unnatural, it just means that a natural seller would be you basically selling the future. So you're selling the future, that's it. What happens with the bond fund, the fund itself would be a natural seller. The folks that are buying that would be unnatural sellers in the context that you can take a look at about the market cap. Well, I'll give you an idea. Watch how this works. This is pretty crazy. So if I just go, and of course direction has the bull and the bear in the bonds, right? But if you want to take a look at market cap-wise, let's see, maybe, I can't pull it up this quick. What a bummer. Okay. But it's a huge market cap. I just can't pull it up this quick. Now, that area would be on the wrong side. And, of course, ProShares has the leverage product. The regular TLT has the product, okay, the inverse of the TLT, the iShares. So those products are out there, and those products, as bonds go higher, are going to have to be closed. They don't have to be closed, okay? But what you will see is that if they don't get closed, there's going to be a huge amount of money lost. So that expansion itself is huge. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow. Wow! Go get them, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.